Australian retail is battling a killer combination of intense competition, tight profit margins and record low wages growth. Analysts say the sector is facing recessionary conditions and fashion brand Oroton could be the next casualty. Liz Hobday hit the shops for this story.
There are the spenders.
We went to a few shops and we were pretty happy.
Yeah, coffee, I don't know, cigarettes you've already bought. Yeah.
I brought a cable from JB Hi.
And the savers.
We're retired, want to do some travelling, so yeah, not spending too much on the shopping side.
Unfortunately, what I want is always expensive. Never mind.
The $300 billion retail sector is doing it tough. So tough, analysts now say it's facing recessionary conditions.
We're on the verge of a really problematic period in retailing. 3 of the last 4 months have been declines in Australia's retailing environment.
Australian brands are facing intense competition and responding with big discounts that hurt their margins. Half a dozen well-known Australian brands have gone under since Christmas, including the chains Pumpkin Patch and Marks.
And many of these businesses only really had to take a 10 to 15% sales decrease year on year for a couple of years, and they were out of business.
The next in line could be the upmarket fashion brand Oroton. It's warned investors that earnings could fall by up to $10 million for the full year, leaving a wafer-thin profit margin of just $2 to $3 million. For Oroton and others, there are big economic factors in play. Wages growth is still at record lows, with yearly pay rises of less than 2%, probably the slowest since the last recession.
We as consumers have less money to spend on discretionary items. Retail is all about selling discretionary items, so the impact is very quick.
Underemployment is also a problem. And on top of this, there are worries in Melbourne and Sydney about a correction in the housing market. The most recent snapshot of consumer sentiment found confidence slipped even further this month, and Australians are keeping their wallets shut despite the spending plans outlined in the federal budget. Whatever the numbers say, in Melbourne's Bourke Street Mall at lunchtime, there are thousands of people out spending their money, and it certainly doesn't feel like recessionary conditions, especially at the top end of town.
The luxury end of the Australian retailing market has been remarkably strong over the last 5 years. It's actually averaged 11% per growth per annum over the last 5 years.
Much of that money comes from offshore.
One of the remarkable things in the retail sector is that it's underpinned with about 30% of sales to foreign visitors. So that's provided a baseline of stability to the Australian economy.
Stability that shoppers would be grateful for.